I've been getting many comments requesting more of my live trading commentaries. I know, it's been a while since my last live trading video. Sometimes this makes me question.
Maybe no one wants to see me pole dance anymore. They just want to see me trade.
Just kidding, who cares about pole dancing? It's all about trading here. Alright traders, my live trading review is back. Today, I decided to use my live trading footage losing over $5,000 to teach a very important skill that all traders must have: how to follow risk management and respect your stop loss. Remember, it really doesn't matter how much money you make in trading if you don't know how to keep the money. Every profitable trader knows that planning stop loss is just as important, if not more, than planning for your profit targets, especially in a bear market. So in this video, you're going to learn how to plan your risk management levels and risk reward as part of your trading strategies, how to execute stop loss, and how to protect your account capital. Don't forget to take notes, ask me questions in the comment section, and smash the like button for more educational videos like this. Let's get started. So on the screen right now is a really good example of a gap down long strategy I traded on BBBY when this meme stock made another crazy comeback. And my thesis on this particular setup is to long the bounce after this huge sell-off and after the open, right? I don't usually recommend trading pre-market. So in this scenario, you can see that after this huge gap down to $10.50 and consolidating around $11 pre-market, the upside is potentially a bounce towards the recent resistance of $13 and potentially $14, $15 upside, while your downside is limited if you are using the pre-market low support at 1040s. So basically the reason I like this for long is that there's a lot more upside and limited downside. The downside is really defined. So on the screen right here, we have the daily chart on the left hand side and the 5-minute intraday chart. The part highlighted in yellow is pre-market trading session. I personally don't like to trade pre-market, but I like to use the pre-market price levels as key levels, especially when trading particular strategies like this. So you can see pre-market lows, we have around 1040, 1050s right here, and the pre-market highs we have around $12. So in this particular scenario, the true confirmation for this long strategy would be if the stock is able to break above the pre-market highs, consolidate above it, and then rip higher. That's the bounce move we ultimately want. Now, if the stock just trades in between $12 and 1050s, then that just means it's pretty balanced and the stock didn't have any strength to push above it. However, if it breaks down that 1050, then that's what we call line in the sand, in which your long thesis is no longer valid. So let's talk about entries here. We have the daily chart on the left side and intraday 5 minutes on the right hand side. We have the pre-market session highlighted in yellow, and the white part is the regular trading hours. So looking at this, I was planning for a VWAP area around 1150s, a starter entry on the long side. So usually I like to start in due to my partial positions and only add to my full size position if we confirm over the key level. So my planned entry is 1130, 1140s, this VWAP dip area, and adding over $12. Now, if you've been watching my channel, you know that planning for your risk is just as important as planning for your entries and the profit potential. So in this case, when planning for my stop loss area, I want to use this $11 area because below VWAP, right, as my risk. And ultimately, 1050s, that pre-market low support, is the line in the sand. So if the stock breaks down $11, I'm gonna be really cautious and think about stopping out. And if it remains heavy and breaking down under 1050, then I know that my long thesis is no longer valid. So now that we know about the 50 cents and $1 downside potential, let's talk about the upside move. If the stock is able to break above $12, then it has a potential rip towards that $14 and $15. And why is that? Because just looking from a daily chart, you can see that once over this $12, you're upside to this level right here. You can see these two little wicks on the candlestick charts on the daily. Those are potential resistance up here at 1330s. But really, the ultimate goal is about $14 and $15, from where this, technically speaking, the stock has sold off the gap. You can see this empty space between the $16 down to $12. That's our price target. So ultimately, we're looking for $14, but ideally closer to $16 for the upside. So in this particular trading scenario, I was looking for minimum 1 to 2 risk reward, and ideally and potentially with adding more size over the key level, 1 to 3 or even 1 to 4. That basically means if I'm risking $5,000 of my capital, I'm potentially making $10,000 or $15,000. This will be equivalent as somebody trading a smaller account, risking $100 to make $200 or $300 and $400. Next, we're gonna go into the actual trade recording of me losing over $5,000 according to my risk management plan. If you're enjoying the video lesson so far and appreciate the transparency, then make sure to smash the like button down below, especially if you want to see more video lessons like this in the future. So you can see market opened at 9:30. I'm long 2,000 shares at $11.72. And the stock at the open, it's already dropping towards that VWAP area. You can see that I have an order sitting at 10.50, seeing if we're gonna, rush down there and I can pick it up for some cheap price. It's not holding around that VWAP area, 1140s. But I'm waiting to see if we're gonna at least get $11. Remember that $11 was my ideal entry. $11, 11.50s. You can see it's holding up right now. You can see me trying to add a little bit. Didn't get filled to full size, and the stock is already bouncing, testing that $12 key level that we talk about. Remember, unless the stock gets over $12, then it's not confirmed for long. So I'm up a little bit, but ultimately I'm looking to add over $12. That $12 mark, you can see I just added that line over here. $12, the stock is on SSR because whenever the stock gaps down and below 10% on the day, negative 10% on the day, SSR is triggered. So can you see me trying to add a little bit, and now the stock is testing that $12 area. Remember what we said earlier, unless the stock is able to reclaim over $12, that true key level, I don't want to be adding to full size. I'm fine starting in with 2,000, 3,000, 5,000 shares, but I'm not getting to full size unless we get over $12. Then that's worth my risk, right? Under $12, you can see I added to 4,000 shares, 4,300 shares with an average of 1180s. But again, we're still testing that $12. We haven't gotten over that yet. I'm up a little bit, but this is not what I'm looking for. I'm looking for that huge breakout over $12 and for the stock to get a huge bounce. You can see we're rejecting that $12. I'm trying to give it some time. The volume was extremely high that day. At the open, we traded around 5 million shares just within the first 5-minute candle. You can see the stock is rejecting hard off of that $12 right now. I'm down about a little bit more than one grand. But again, ultimately, I'm okay risking below VWAP if it doesn't work out. You can see this is now more zoom in now. You can see the stock is testing just around VWAP on the 5-minute chart, 1130, 1120s mark, and it's remaining very heavy. You can see that I'm thinking about adding more around that $11 mark. Remember, 1050s is being my ultimate risk. But in hindsight, looking at this, I shouldn't have added so soon. Oh, actually, I didn't add. I actually stopped out. So if I rewind a little bit to watch how I stop out, when I stop out, when I know I'm wrong, especially when I'm trimming these position sizes, I just click and then sell. I don't wait, I don't bag hold. If I'm wrong, I want to get out right away. So I stopped out 2,000 shares at 1090s. So that took about $1,800 loss. You can see we're still remaining heavy. We haven't consolidated over that $12 mark yet. So stock is remaining heavy and, things are not looking too good right now. And I decided that was time to bid. You can see I just click on the bid 1062 because the stock was extremely heavy. Had to get out on the bid. When I'm trying to get out, I just click the bid side on the left side of your L2 and I click sell. So I stopped out of this trade on the losing side for $4,600 loss. Trading around how many shares I had? Around 4,300 shares. So about $1 loss per share. Obviously, it sucks to lose, but honestly, this was my starting position, and I was ready to risk at least $5,000 to start with. But if I'm wrong, I know I'm gonna make 2 or 3 times more. You can see after fast forwarding now, the stock is trying to bounce from 1060s off the lows to 1130s. So a lot of people will be thinking,
oh my god, I should have just held my position. I would have lost less. But
you really don't know that, right? A lot of times when I'm wrong, I just prefer to get out instead of holding on to a loser. Because what if the stock just cracked through that 1050 and go down to $10? A lot of times if I'm wrong, I just want to get out and reassess the situation. So, but over here, I did make the mistake of going back a little bit too early. But I'm glad I only went back with 1,000 shares at around 1150s on the long side again, thinking that, okay, we might start consolidating over VWAP. If we get over 12s, that's when I will add. And I'm glad I didn't add because, spoilers, this didn't end up working out the second time. But this time around, knowing that I had already lost my initial starter position, I'm a lot more careful with how much position size I use on this second attempt. Again, the stock is bouncing to 1160, 1180s, but that's not what I'm looking for. The plan is ultimately over 12s and above for the big bounce move. Remember earlier what we talked about, the stop loss area is under $11 under that VWAP over here, and ultimately under 1050s. If the stock actually breaks down, then the thesis on the long side is no longer valid. But at the same time, the long confirmation, it's not really confirmed and not really true until over that $12 mark. So that's the reason I'm staying small on the second attempt with only 1,000 shares. Despite this huge overnight gap down, the stock is still really weak and there's a lot of sellers. So you can see on the 5-minute, we're losing that $11 bid. And it's not good, right? Remember, $11 mark is our stop loss area. So now, seeing that $11 not holding, I'm going to get ready to stop out of my remainder 1,000 shares at 1150. So I'm risking 50 cents on this trade. You can see stock remaining heavy, but thankfully, I only used 1,000 shares on this second starter. Holding for a little bit, trying to do a dead cat bounce. For a stock to be breaking down VWAP twice already after only not even half an hour of the open, that tells me the stock is extremely weak. It's not ready for the long side. And then fast forward 5 minutes later, it's still struggling around that $11 mark, trying to reclaim once again over 1120s. But it's still remaining very, very heavy. There's definitely an imbalance. And reviewing this clip in hindsight now, which I still do a lot, reviewing my own trading recordings, I realized I should have stopped out a lot earlier on my remainder of 1,000 shares. I think in hindsight, if I had stopped out earlier, I probably would have flipped short. But no, I was still holding on to that final 1,000 shares. Well, it's not a lot. I think it's about the missed opportunity cost. That's a little bit painful to watch. Because it could have been a great short, actually, under that $11 mark, with a downside to 1050 and potentially below as well. And remember, the stock is remaining below VWAP. So it's really weak, but relatively to the volume and the price. You can see we're rejecting that VWAP area once again around like 1120s. Okay, you can see that I placed my order for 1,000 shares to cut the loss at 1102. So it's basically trying to sell it for 50 cents loss. Let's see if I get filled because the stock is turning really heavy. You can see we're rejecting VWAP once again and I'm out. So I stopped out at actually 10.95. So I lost about 50 cents per share, 60 cents. So that adds to another like $500, $600 loss. Together tallied up to $5,200 loss on this trade. So back on the trading view chart, I'm glad I stopped out, even though I stopped out here a little bit too low, down here at 1095s. The stock eventually sold off even more, down to 1050s, but kind of bounced around for a while. That 1050 line in the sand never truly broke down until much later on near the end of the day. You can see after 1050, it bounced off to VWAP again and chopped around. You have like a short-term rally during the middle of the day from 11:30 to 12:30s when the stock went to test that $12 again, that $12 key level. But I'm lucky that I wasn't around because I would have gotten chopped up once again. As that $12 broke out to $12.50, that's great. But there wasn't enough volume nor momentum to keep it afloat and to stay around the key level. So you can see the stock sold off from 12s and back to lows into the end of the day. If I have held on to it, or if I revisited again and again after the first two attempts, I probably would have lost even more money than just $5,000. So is $5,000 a small loss or a big loss for me? To be honest, it's a relatively small percentage of my account size. And thankfully, the position size I was using this trade, the first and the second one, were just a starter size. I was planning to scale in more, essentially adding even more position size if we had reclaimed over that $12 key level. But even for myself, upon reviewing this footage earlier, I also realized that I should have stopped out of my remainder 1,000 shares starter way sooner. I think I definitely held on a little bit too long after seeing that the second attempt of $12 and VWAP kept on failing and the stock was having trouble holding that $11 mark. So that's something I can improve on next time. Doesn't matter if the starter is 1,000 shares, 5,000 shares, or 100 shares. I think, if you recognize that your thesis is not valid and the stock is just really weak, I think I should have stopped out way earlier. But it really doesn't matter what amount I lost or earned. What matters most is that the trader has the ability to learn from experience and become a more disciplined and more consistent trader over time. So next time around, I'll be a lot more patient after the open and I'll stop out of my starter positions way sooner. Most importantly to me, I want to be able to use my losses to offer valuable lessons to my fellow subscribers, you guys and gals here watching this video, whether it's a win or a loss. If you've been watching my videos since 2020, you know I'm never afraid of showing my losses as they are really part of the reality in day trading. As someone who teaches day trading on YouTube, I think losing trades generally provides more valuable lessons for my viewers and for myself as well. If you enjoyed this video lesson on how I planned out my risk reward and following my stop loss, then make sure to check out the next video on risk management and price action trading. And if you need a more structured program on day trading strategies, especially risk management, then you should check out the Humble Trader community down below. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next time.